Okay, welcome back to part 2 of our video where we're talking about better returns on your investment using CDs and or treasury bills as opposed to a saving accounts at a bank where you earn little to nothing. Gotta laugh at that one. We said that CDs and treasury bills pays much more interest than what you'd have earned on your savings accounts. We looked at interest on saving accounts, and I showed you my saving account with $3,000 in there, and I earned 15 cents over a 6-month period. I also showed you that if I'd used that $3,000 to purchase a treasury bill over the same period, 6 months, I would have earned something like $60, which ends up being like $10.14 per month. Way better than 3 cents, right? Or 15 cents for the 6 months. We looked at what a CD is. We looked at what a treasury bill is, and we looked at how they work. And so now in part 2, we are going to talk about how to purchase CDs and how to purchase treasury bills. And to do that, I'll show you from start to finish that you'll need to create an account. I'm using Fidelity. So if you're using a brokerage firm like Fidelity, I'll show you how to create an account there, how to link it to your bank account, and then how to transfer money from your bank account to Fidelity, and then how to actually make the purchase. Right? Without further ado, let's jump in. Okay, this is Fidelity's website. That's their brokerage firm webpage or account page that you'd use to log in if you have an account, and if you don't have an account, you would need to set up one. So step 1 to purchase CDs or treasury bill is to open an account. So we click on open an account. Here are the IRAs, and here we have the brokerage account, and over here is the cash management account. This is what we need. Open account. So we click on the button that says open now. All right, answer the question, are you already a Fidelity customer? The answer is no, but just to clear up any curiosity that you have, for those that have an account, if they were to click on yes, then the verbiage down here would change to tell them that since they have an account, they would need to first log into their account and open the account from there. In your case, the answer is no, so we check no and then click next. On this page, it's asking you to fill out these information: first name, last name, your social security number, and your date of birth. These two things are critical because if something should go wrong, you lost your PIN number, your login information, password, etc., and you call Fidelity, they would use either the social security number or the date of birth or both together to identify you and to ensure that you are the true owner of the account. So make sure that you pay attention to what you're entering and that they're accurate. Then you fill out the rest and come down here. You want to fill out this information and make sure to pay attention to the state you're choosing. Why? Because when it comes to the treasury bill and the CDs, the treasury bill have federal income tax but no state and income tax, and the CD has federal income tax and state income tax, which means you'll have to pay federal taxes on the earnings for your treasury bills. You don't pay state income tax on your earnings. For the CDs, you pay federal income tax on your earnings, and you also pay state income tax on your earnings. The reason why we want to pay attention to the state here is because some states do not have state income tax. Here are the list of states that does not have state income tax. I'm in Texas, and so what that means, if I'm in Texas and I'm purchasing CDs, I don't have to pay any state income tax because Texas does not have state income tax. If I'm in New York, however, then yes, I would have to pay federal and state income tax. Right? So that is the reason why we want to pay attention to the state here. All right, once you fill everything out, you would click on next, and then it's going to ask you to choose your password, verify the account, and so on. Then the account is created. Once the account is created, I'm going to click on Fidelity here to go back to the page. So once the account is created, the next thing you want to do is to log into the account to see what your account looks like. So I'm going to go ahead and log in. All right, now that I've logged in, this is what the account looks like. It would have your account on the left-hand side. In my case, I have a list of accounts, so they're all there. In your case, you would just have one. All right, so what is our next step here now that our account is set up? The next step is to link your bank account to your brokerage account. In order to do that, we want to go to transfer. Now, see this transfer here in the menu bar? We don't want to use that one because if you do, this is what it's going to ask you. It's going to ask you to choose the account that you're coming from. And since the bank is not yet set up, you don't have a bank account there to choose the bank account that you're taking the money from there. So let me go back here or exit out of here. So instead of using this transfer on the menu bar, you want to go up to Accounts and Trade and come down to Transfers. One is Transfer and the other one is Transfers. You click on Transfers and then it has some options. On the Manage, you want to click on Manage Bank Account. Once you click on Manage Bank Account, then in my case, I have some bank accounts here. You wouldn't have anything because you're brand new. So you would have to click this button that says Link a New Bank Account. You click on the button and it will send a code to the phone number that you would have set up in the account setup process. So, all right, so I got my text message and my code number is 381952. I click and submit my security button there. And boom, it takes me to this page, link a bank account. Let's walk down this page. So we're transferring electronic funds transfer. That's the option that we're choosing here. We don't want to choose bank wire because that costs a lot of money. And so it's electronic funds transfer we're choosing. I do own the account. So who owns this bank account? Myself. And is this bank account a business account? The answer is no. Now it wants you to log into your bank account. And so it has two options here. Log into the bank account with Plaid, which is a third-party software. I don't recommend using Plaid. So I would go to enter my bank information on my own. The reason I don't recommend Plaid because it's a third party and you don't want to have your banking information sitting out there in a third party software. Okay, it's rather let's keep it with Fidelity. So once I make my choices, then I click on continue. Now, here it's asking me which Fidelity account do I want to transfer the funds to. In my case, I have multiple ones. You would just have one account that you would have set up, right? Once you choose the account, it asks you again, bank owner. I am the owner, and it's checking account. Here, it asks you to fill in your banking information, and once you fill it in, the next screen, it's going to ask you to enter the amount you want to choose. So for security reason, I'm going to skip this page and let's show you what the other page looks like. Okay, so once you enter your banking information, it takes you to the page that says success, your bank account has been linked. And down here, next step, you click on transfer now. Okay, click on transfer now. Then it asks you, which account do you want to move the money from? You choose the account. In my case, I choose one. Then you choose which account it's going to. Boom, there's the account. And you simply enter your amount here. I am just going to transfer once. If you want to set up something so you have a monthly transfer, you can do that. And you enter the date that you want to start, and every month it would take money out, maybe $50, $60 or something like that. All right, in my case, I am just making a one-time transfer. There's the amount, and when you click on continue, then it will ask you to confirm, and boom, the money is transferred. I am not going to do any transfer here because I've already done that with my accounts. So I'm just going to back out of the screen or just exit to go to my portfolio screen. All right, once you come back to the account, now the money is transferred. So let's summarize what we have done. We've opened an account, we linked the bank account with the brokerage account, and we transferred the money. So money is ready to go. Now we're ready to purchase. So to see the money, I click on position. Let me choose the account here. I think it was this one. I click on positions, and I have a list of securities that I purchased. Yours would be blank because you would not have purchased anything as yet. And the only thing that would be there is this first line that says Fidelity Government Money Market. That's the entire name. And when you come across to the current value, it would have the amount that you transfer. So whatever amount you would have transferred, that's what would be there, and the same thing would be here. So now you're ready to purchase. So let's go ahead. We're going to purchase two things. One, we're going to do a CD purchase. You see how that works. And then the next, we'll do a Treasury bill purchase. So you'd come up to News and Research, come down to Fixed Income, click on that, come down to this page. And we said we're doing CDs first, so we click on CDs and ladder. All right. What's a ladder? We'll cover that in another video. I may have to do like a part 4 or see if I can fit the ladder into part 3. All right. But anyway, we're purchasing CDs. So here are the terms on the rates for the CDs. And let's see if there's anything to be said. I think we covered everything that there's to be said about CDs. So I'm just going to jump right in. Before choosing anything, you can see it lists all the CDs with the different banks that are issuing the CDs and the coupon rate, that is the rate of return. And over here, this column that says call protected, yes, you want it to say yes. What call protected means is that banks can recall the CD that you purchase, which means if you purchase a 3-month CD and say the rate is not going in the favor of the bank, then they'll recall the CD and before the period ends, and you would have just forfeited your interest. You just get back your principal and you make no interest. So because of that, we don't want a CD that is callable. We want something that is call protected, which means they will not recall the CD. Okay, and all right. So I am going to look at 3-month CDs. So I click on the 3 months. I click on the rates here, and it lists everything here. And I'm going to come down here to show you something. Anytime you about to purchase a CD and you come across and you see this sky here, it means that there's a restriction on the CD. A lot of times, depending on the state you're in, it will say if you're in XYZ state, you're not allowed to purchase the CD. So I click on here. I'm in the state of Texas, so I bring my window over here. I don't see Texas here, so I am okay. Feel free to read through what a sky is. To do that, you click on here, And let me bring across my window. Okay, so here it tells you what the different restrictions are. And where's the sky blue? Boom, 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 boom. Here's sky blue. So you can come on and read here. In the interest of time, I don't think I want to do that today, but the verbiage is there for you to understand what the law is about, why some states are restricted from selling that CD. All right, so I'm going to go ahead and close this window. So I just wanted to show you that. All right, so let's see now. So I look for a coupon rate with the highest rate and see if I recognize the bank. Because this is a demo, I'm not even going to pay attention with the bank recognition. I'm just going to assume that I know the bank. If you don't know any of the bank, feel free to just go ahead and pick the highest rate and purchase. So again, the bank, the coupon rate, that's the rate of return. The date it's maturing, I picked 3 months. We're in March, so June would be 3 months, and it's called protected. It won't be called. Settlement date, when I make the purchase, this is the day that the transaction will be settled, and which means I then have the CD on my account from there on. And what else? Quantity available, the number of CDs available, 32,000, and it's 3 months. So let's go ahead and click on buy. You choose the account that you're purchasing the CD on, put in the quantity 1 and zip in the 1, hit it 1,000, show up there. If I put in 3, it will be 3,000 because the CDs are sold in the increment of 1,000. Right? So in this case, I'm just going to do 1, and I don't want it to auto roll, so I'm going to say no. What auto roll means is that at the end of the term, it will automatically purchase another term, and we don't want that. So I say no. If I want to purchase another term, I'll do it on my own. All right, now we preview the order. Once the order is previewed, it shows you everything that's going on, and then you would place the order. Because this is them, I'm not going to go ahead and place the order here, because once you click this, the order is placed. And then I'm just going to back out of it, come back to account, come to my portfolio. So now I've purchased the CDs now, and what you would see here, get into your account and come over to position. Make sure that you're in the account name should show up on the top here. Click into positions, and then everything would list here. Again, I have a list here, so yours would just have one, and it would have the name of the bank. Let's see. In this case, I had purchased a CD from Dubuque, I think that's pronounced, bank. When you click on it here, it shows you the name of the bank and that it's a CD, and the rate 5.1% and when it matures. All right, so let's go purchase a treasury bill. So to do that purchase, we go back up to news and research and come down to fixed income. All right, and then it takes me to what they call a yield table. I don't want to use anything from here because all that's listed here is the different securities that Fidelity offers, and here's the treasury. Inside here, there's bonds and notes and treasury bills and so on. So if you're not paying attention, then just think that this says treasury bills, and then come and click on, say, under the 3-month term, you click on the interest rate here. What will happen, it will list bills and notes and everything down there, and that's not what we want. Plus, because it says 3 months here, if you want to purchase a 4 weeks or 8 weeks, you can't do it here because it's limited to 3 months. Again, treasury bills, they're short-term securities, so they only go up to, I think, 9 months because of, their short-term nature. After that, it will be all notes and other things that the Treasury Department is selling or issued. So in order to purchase a shorter term, I want to come up here on the yield table and click on bonds. Okay, it have 589 bonds. So if I click on here, I'll see all of them like this. And then you'd have to sort through to find the bills. We don't want to, go through that. And you can see the first one says treasury bills. Yes, I'd want a treasury bills, but the rate is, might not be the best rate. So I want to just list only treasury bills or treasury bills and notes and then sort to get the highest rate. So rather than doing that, I'm going to click on my back button here to just go back to the page. So rather than clicking to see all 5, 8, and 9, I want to specify my period. And so if I want a 4-week, March, April, then I choose April with the maturity month, and then I choose the year. All right. I may have to come back and choose a longer period to get a good rate, but anyway, let's do this to show you what's going on. Once I do that, I want to click on OK, because if you just choose and then click here, we're back to square one where we're seeing all 5, 8, and 9. So make sure to click OK, and it lists 17 of them. So you click on the button to see all 17, and now there they are. So you come over here, click on yield to maturity, and it lists the highest rate above 4.191%. And so what's going on over here, it lists the Treasury bills and notes. The first one here is note, and this is probably because it's just a 1 month. But if I come down here, here's a Treasury bill here. You scroll across, it the mature date is April 25th. This column here is the bid column, and this is the ask column. We want to focus on the ask column. The bid column is what's being sold, is what you are selling. And in this case, we're not selling, we're buying. So we come over to ask, and where's my bill? And see, move this decimal point one place to the right, and that will give you the discount rate, $963.37. See this little box here? It's called depth of book. And when you click on it, what it's showing you here is whether or not you can purchase one CD or not. You can purchase one CD, but it's listing here. In order to get the rate that you were looking at, it has a minimum number of CDs that you would need to purchase. And this number on the left is the amount of CDs that are available, amount of that particular CDs that are available. So I wouldn't buy any of these because I'm not buying 100 CDs. I just need one. Matter of fact, if you click on buy, it's going to ask you for, let's do it to show you. It's going to ask you for the quantity. And if I put in the quantity here, it will just adjust to the rate that match you buying one CD and not the rate that we saw for a minimum of 3 CDs. What I want to say is that you don't necessarily have to go into that depth of book. You could just simply click on buy here and choose the account that you're purchasing the CD for. You put in the one and it will adjust it. All right. There's something else I wanted to show you here before I go to pre-order. I want to go back and let me close that screen. I want to go back and choose a longer period to show you that the longer the period, the better the rates. So I'm going to come down here, and let's say we choose all the way out to August, which would be about 6 months. So choose August 2023, click on OK. It has 70 of them. Click there to see them. First one is the Treasury bill, and you can see, oh, I didn't sort maturity. So it's better than 4.1, no, it's 4.7. So let's go ahead and choose this one because the maturity date is August 31st, 2023. It lines well with the period that we're looking for. So we just simply click on buy. Choose the account that we're adding it to. Choose the quantity, one, and now we preview the order. So once the order is previewed, what I want to point out here again, remember when we buy the CD, we simply look at the rate, and then when you multiply the rate times the $1,000, that gives you your earnings. When it comes to the Treasury bills, it works the same way, but it has a little bit more to get your earnings. So you'd have to come in, and let me bring over my calculators here. So take the rate, which is 4.72, and divide it by 12, 4.727 divided by 12. That would give you this, which is the monthly rate, and then having to multiply that by 6. So rather than getting into all of that, the easiest way to determine your earnings, as we pointed out before, is just take what you paid for the treasury bills and subtract the value at the end of the maturity, and that gives you your earnings. So in this case, it would be $980.26 minus $1,000, and your earning is $19.04 over the 6 months period. All right. So that's how you go about purchasing the treasury bills. I'm not going to click on place an order here because, of course, I have all kinds of purchases that I have in place already, and this is just a demo. So I'll stop it here. So this brings us to the end of part 2, where we looked at how to purchase CDs and Treasury bills. And as you can see, the step involved creating an account, then link the account to your bank account. And once the both are linked, the bank account and the brokerage account, then you transfer money from the bank account to the brokerage account. So you have money in there to trade, and then you make the purchase. Next, we're going to look at part 3, where I'll show you how to set up a ladder and talk about what a ladder is. Don't forget to share, comments, and subscribe. Don't keep it by yourself. Share with others, all right? See you in the next video.